Realty Income Corporation, ticker symbol O, is one of the most popular real estate investment trusts. It specializes in investing in retail and commercial properties. It is known for its unique business model, which involves owning and leasing out properties to tenants under long-term leases with rent increases built in, earning the nickname the Monthly Dividend Company due to its reliable and consistent monthly dividend payments to shareholders. As you can see, Realty Income is currently trading at its 52-week low with a share price of $55 a share. Rising rates pushed prices of most REITs lower, but that's really opening up an opportunity for long-term dividend investors to buy some of the best REITs at increasingly attractive yields. If you are looking for reliable dividends, now is the time to act. Realty Income has a market cap of $40 billion. This makes it the largest net lease REIT. Its portfolio includes over 13,000 properties in a diverse range of industries, including convenience stores, drugstores, supermarkets, and theaters. The company has a strong track record of financial performance with steady revenue and earnings growth, as well as a solid balance sheet with manageable levels of debt. Realty Income has been increasing its dividend every year since it went public in 1994. It has a high dividend yield of 5.5% and pays dividends every month, making it a popular choice among investors who are looking for reliable income. Personally, it's my favorite REIT stock, and it's the second largest position in my portfolio. Over the last year, Realty Income's shares have experienced a 90% decline, resulting in a corresponding increase in the dividend yield to 5.5%, which is more than 3 times higher than the yield of the S&P 500. The current yield is the highest it has been in the last 5 years. Realty Income has consistently demonstrated that a dividend yield exceeding 5% represents an attractive entry point. Historically, this is a great time to buy our stock. Realty Income is in the process of expanding its geographical footprint. In second quarter of 2019, it bought a collection of grocery stores in England for a total of $550 million. Currently, Realty Income possesses approximately 300 properties spanning across 4 European countries. This strategic expansion into Europe's emerging net lease market represents a significant addition to its portfolio and offers a new avenue for long-term growth. It would be difficult to find a safer monthly payer than Realty Income. It has increased its dividend annually for 29 consecutive years, with a 4.4% dividend growth rate over that period. Its 5.5% dividend yield surpasses the average real estate yield, which stands at 4.46%. While it may not boast the most impressive dividend growth rate, particularly in the recent years, Realty Income's track record is marked by consistency and security. With its 5.5% dividend yield, the key lies in maintaining these steady increases over time. This REIT is not going to excite you, but it should continue to provide an attractive income stream for years to come. With an impressive 99% occupancy rate and an average remaining lease length of 9.6 years, the cash flow generated becomes highly predictable. Over the past 25 years, Realty Income has delivered an impressive total return of 2,100% to its investors, outperforming both the Nasdaq, which generated a total return of 755%, and the S&P 500, which achieved a total return of only 454%. Realty Income is starting to expand its portfolio into the gaming industry. In December, the company finalized a significant $1.7 billion sale-leaseback agreement for the land and real estate assets of Anchor Boston Harbor. Furthermore, just last month, Realty Income entered into a $950 million commitment for a joint venture alongside Blackstone Real Estate Income Trust, which will jointly own 95% of the real estate assets of the Bellagio Las Vegas, an establishment operated by MGM Resorts International. These deals not only open up new avenues for cash flow, but also contribute to the diversification of Realty Income's portfolio. According to analysts, the company currently has a hold rating, with a price target of $68 a share. This target price suggests a potential upside of 24% from the current valuation. Another positive indicator is the significant interest from institutional investors, who have collectively purchased shares worth $5.7 billion in the last year. As a result, institutions now hold a substantial 78.8% ownership stake in the company. This strong institutional support can often be seen as a vote of confidence in the company's prospects. The number of shares outstanding has more than doubled over the past 5 years. This is exactly the opposite of what we want to see. This pattern is quite common among REITs. They often issue additional shares to secure the necessary financing for property acquisitions. In conclusion, I think now is the perfect moment to buy some shares of Realty Income. But don't take my words blindly and do your own research. I own shares of the company and plan to acquire more, especially while they are under $60 a share. The share price recovery is likely forthcoming, possibly even before interest rates begin to decline. Until then, I plan to acquire as many shares as I can. To me, this investment offers one of the most secure payments options available, and I can't afford to pass up on this 5.5% dividend yield. Once it reaches $50 per share, I will consider taking a more measured approach. Till then, I am consistently purchasing shares every month. If you found this video helpful, please give it a thumbs up and consider subscribing for more dividend related content. See you in the next one. Bye bye.